Hi, my name is Travis and this is Minoli, and we are from Asia Wealth Management Services, and we are here to present our research on a hot topic that has garnered a lot of interest among investors, which is the IPO of the People's Leasing Company Limited. And so to get things started, Minoli, can you just give us a brief overview of the company, its history and its core activities?
Yeah, actually, first of all, I'll come through the issue details. Actually, the People's Leasing Company, they announced their initial public offering, which is scheduled to be on 3rd of November. And then they'll be issuing 390 million shares at a price of 18, collectively to collect a capital worth of 7 billion. But basically, if we take why the main objective of the PLC going for an IPO is just to be in line with the central bank directives as to list all the finance companies by 2011. So, and then if I talk about the company itself, the People's Leasing Company. The People's Leasing Company is the pioneer in leasing business in Sri Lanka. So basically, the company is operating with 6 subsidiaries, where all of the subsidiaries are related to the finance sector. And if we take People's Leasing Company, their products are more into hire purchase, leasing, operating leases, the products basically in the leasing industry. So and also what we can significantly say in the People's Leasing Company is that their loans or the loan products that they are giving is basically related with income generating activities. Say their major product, the major leasing product is leasing buses. So buses, the revenue or the interest income is readily pegged with the income with an income earning asset. So because of that, we can see their loan book and their non-performing loans are relatively low. So that is basically a brief introduction about the People's Leasing Company.
Right. And looking at the numbers, what is the profitability relative to other listed finance companies?
Okay. As we see, normally finance companies are earning a higher spread if we compare with other banks, because the interest rates are very high. So currently, if we look at their with the historical growth in interest income, they have actually gained a cumulative growth of 28% in their interest income. Also, their current spreads, basically when we analyze a finance company, we look at their spreads. So if you look at the spreads, it is somewhere around 9%, so which is really convincing for a finance company. And also, if we take the cost base of the company, their cost to income ratio, basically what we take for the cost to income ratio is basically the operating expenses, and we consider it with the operating income. So when we get the cost to income ratio, it is around 32%, which is very low, which is very good for the company overall. So their profitability is really good compared with the peers.
Okay. And what's their asset quality like?
Yeah, in terms of asset quality, as I told you earlier, actually their non-performing loan ratio stands around 1.2% basically in their loan book. This is because they are monitoring their loan book really well, the management strategies are really good. And also, if we take why their non-performing loans are really low, is because of the reason that the income lines are really pegged with the income earning assets. So that is basically the reason. So asset quality is very good comparing.
And with regard to funding, how is it composed of?
Actually, since People's Leasing Company doesn't have a license to collect deposits from the customers, their major funding method is actually the borrowing. So if we take their funding method as borrowings, but as a group as a whole, now if we take People's Finance PLC, it is a subsidiary of People's Leasing Group. So People's Finance Company has the opportunity to collect deposits from the customers. So as a group they have deposits, but if we isolate People's Leasing Company, their major funding is borrowings.
Okay, and I think a hot topic among especially retail investors is with regard to this bonus issue. So can you explain a little bit?
Yeah, actually one of the topics that most of the people were talking about, whether the people who got the shares from the bonus issue will dump the share at the very first day. So but what we need to say here is the bonus issue has been initially done to People's Bank, which is the parent company of People's Leasing Company. But the thing is, bonus issue has been done to People's Bank, and also it has given to the employees. But the thing is, the shares which is issued from the bonus issue is locked for a period of 1 year, so that they are not in a position to sell their shares as other people just going with the rumor. Actually, they can't. Actually, they are in a locking period of 1 year.
Thanks. And so, just to conclude, based on your analysis, what do you think the target price of the company will be?
Yeah, actually we conducted residual income valuation as well as a dividend discounting methods. And also we included a little bit of sensitivity. So from the dividend discounting method, we got a price range from 19 to 29, a price range of 90 to 29, and also from a residual income valuation base we got a price around 26. So, and by looking at the future prospects of the company and also its current position as a pioneer in leasing industry, leasing sector, we can say the company has good potentials going forward, and also considering the valuations, we think it is a good stock that investors can look into.
And also, one final question: given the volatility that is prevailing in the market, a lot of especially retail investors, they're on the hedge with regard to investing in this IPO. So, what do you think the prospects are? Do you think retailers should go for this?
Yeah, actually, now these days the market is really volatile. So, IPO, a big IPO, a 7 billion worth of IPO coming at this time, it would be questionable for so many investors. But we can say, by looking at the company's prospects, this IPO, this share is we can say it is a medium to long term investment, not that that the investors can gain a quick gain from at the initial date. So we basically say that it's a medium to long term investment considering the future prospects of the company.